Welcome to the Deep Dive. Today we're taking a really comprehensive look into the global real estate market. We're using projections here that, well, they start back in 2021, but stretch all the way out to 2033.
Mm,
And this whole deep dive, it's based on a pretty detailed market research report. It's packed with, specific regional data, country-level stuff, and those compound annual growth rates, the Fannie GRs.
right. Those are key.
Exactly. So our mission for you today is pretty simple, really. We want to pull out the most important bits of knowledge from this report, give you a shortcut sort of to understanding where this critical global sector might be heading. Get ready for some, well, maybe surprising facts and some key insights.
Oh,
Okay, let's unpack this.
what's fascinating here, I think, is just how central real estate is. It really is a cornerstone of economic growth, isn't it, worldwide?
It absolutely is.
It's so much more than just, bricks and mortar. It's the infrastructure that holds economies up, the jobs, the wealth it represents, and these long-term projections, they really just underline that fundamental importance globally.
Indeed. So, okay, let's start with that big picture then. The overall global direction. In 2021, the global real estate market, the sales revenue was just under, let's see, $3.123 trillion.
A huge number already.
Huge. Now, fast forward to 2033, and that number is projected to, well, nearly double. It gets close to 5.835 trillion.
Wow.
Yeah. And that works out to a compound annual growth rate, a CAGR, of just over 5.3%, which signifies, pretty steady, robust expansion across the whole globe.
Hmm.
When you think about that level of growth, sustained over more than a decade, it really says something about the resilience here and the demand.
Right. The implication of that kind of consistent growth is, well, it's pretty clear. We're seeing increasing demand pretty much across the board. Residential, commercial offices, industrial logistics hubs, you name it, globally.
So it's not just one area driving it.
No, it's just a really resilient sector overall. It's adapting to changing needs, attracting significant investment. It just keeps growing.
Okay, so now let's zoom in a bit. Because that global average, it kind of hides some really interesting stories when you look at specific regions and countries. First up, North America, a market with, well, a solid foundation. It's projected to grow from about $618 billion back in 2021 to over $1 trillion by 2033,
A trillion.
with a TGR of around 4.5%. Now, within North America, uh, no surprise, the United States has the dominant share, takes the lion's share of that market value.
As you'd expect.
But here's where it gets a little more interesting. Canada is actually showing a stronger growth rate. Its CAGR is over 5.2%, which means its market value is projected to nearly double by 2033.
That is interesting. Higher than the U.S.
Right. And Mexico also shows healthy growth, around 4.6% CAGR. So yeah, why do you think Canada's growth rate is notably higher there?
That's a great question. Canada definitely stands out there. I mean, the U.S. is bigger in volume, sure, but Canada's faster growth? It could be a few things. Strong immigration policies, for one. That drives consistent population growth, especially in cities like Toronto, Vancouver. Creates housing demand, right?
Ah, okay. Makes sense.
Plus, targeted infrastructure investments, maybe a relatively stable economic picture.
Right.
That could make it more attractive for foreign real estate money compared to, say, the U.S. right now.
Gotcha. Okay, moving across the Atlantic then
Yeah.
to Europe. Here we see, well, a much more mixed bag of growth stories. Europe as a whole, the sector is growing at about 4.5% CAGR, projected to hit over $650 billion by 2033.
So it's similar overall growth to North America, roughly.
Roughly, yeah. But within that, Germany maintains really consistent strength. Its CAGR is over 5.1%, making it a key driver. But then you look elsewhere, and it's fascinating. The contrasts are quite stark across the continent. Well, countries like France, Italy, Russia, they're seeing significantly lower growth rates, more like, 3% to low 4% range. It's quite a bit lower than Germany, or even the UK and Spain, which are closer to the high fours.
Right. That is a key point. Germany's got that strong export economy, the industrial base, maybe more disciplined fiscal policy. It provides a stability that just attracts investment.
Mhm.
France, maybe dealing with more restrictive planning rules or different demographic shifts. Investor sentiment could be different too.
And Russia.
Well, Russia's market, it's still growing, but it could be reflecting, broader geopolitical things affecting investment flows. It really shows you these diverse economic stories playing out across Europe, different factors shaping each market.
Okay, now, here's where it gets really interesting, I think. The Asia-Pacific region,
Right.
APAC. This is projected to be the fastest growing region overall. It was valued at over 1.6 trillion in 2021.
Trillion, wow, already huge.
Exactly. And it's projected to soar to more than $3.2 trillion by 2033. That's a CAGR of almost 5.8%. Really robust.
That's significantly higher than Europe or North America.
Significantly. Now, within APAC, China is, well, dominant, expected to hit nearly $1 trillion itself by 2033 with a strong 6% CAGR. But India is surging. It had the highest CAGR in the entire report, over 6.5%.
6.5%, that's massive growth.
It's huge. That kind of rate means the market basically doubles in about a decade. It goes from around $269 billion in 21 to over $574 billion projected by 2033.
Incredible. What else stands out in APAC?
Singapore is also very strong, over 6.2% CAGR. Southeast Asia collectively shows impressive growth, too, over 6.4%. And then you've got Japan, South Korea, Australia, Taiwan, all contributing significantly. Generally, key GRs above 4.5%, mostly in the fives, actually.
So if we connect this to the bigger picture, APAC's rapid expansion, it's clearly driven by, well, a powerful mix. Large young populations, right?
Yeah.
Ongoing rapid urbanization, a massive middle class emerging with more spending power, plus big government infrastructure projects.
A perfect storm, almost.
Kind of. And these really high growth rates, they signal a profound shift, a shift in global economic influence towards these Asian markets. They become absolutely critical for any global investor or strategist to understand. It's not just growth, it's fundamentally reshaping the global economic map.
That's a really powerful point. So we've seen North America building steadily, APAC leading the charge. What about South America? Is it keeping pace?
Yeah.
The South American market was over $168 billion in 2021, forecast to reach almost $328 billion by 2033. That's a CAGR of nearly 5.7%. Very healthy.
Almost matching APAC's overall rate then.
Pretty much, yeah. Brazil is a key contributor, over 5.5% CAGR. But maybe surprisingly, Argentina is actually showing the fastest growth in South America, over 6.2% CAGR.
Argentina, wow.
Yeah, Chile is also strong, nearly 6% CAGR. Colombia and Peru contributing significantly too.
So South America's growth is actually quite impressive, nearly matching APAC and definitely outpacing North America and Europe. It signals another region with really substantial emerging potential, maybe driven by commodity prices, internal development, growing consumer base, urban upgrades. Could be many things. It's starting from a smaller base than the big players, obviously, but that sustained high growth makes it a really fascinating region to watch.
Definitely. Okay, next up, let's look at the Middle East. This market was worth almost $197 billion in 2021. It's expected to expand to nearly $375 billion by 2033. That's a CAGR just under 5.5%.
Solid growth again?
Very solid. And here, UAE really stands out. It's one of the strongest performers in the whole report, actually. A remarkable 6.185% CAGR.
Over 6%, wow.
Yeah, projected to more than double its market value by 2033. Turkey is also growing significantly, over 5.8% CAGR. Saudi Arabia, over 5.5%. Qatar, over 5.2%. Egypt, just over 5%.
That strong growth in places like the UAE and Saudi Arabia, it's definitely fueled by those big national visions, isn't it? Diversifying away from oil.
Seems likely.
You see these massive state-backed infrastructure projects, big efforts to attract foreign investment, growing tourism, tech sectors. It all creates new demand. They're actively trying to transform their economies, and real estate is, well, a major beneficiary of that.
Makes sense. Okay, finally, let's turn to Africa. The continent saw real estate sales just under $119 billion in 2021, expected to grow to over $225 billion by 2033. That reflects a KGR of almost 5%, so nearly matching the global average rate, but from a smaller base.
Right. It's the smallest regional market in value terms currently, but still expanding significantly.
Exactly. South Africa is a strong performer within the continent, over 5.6% CGR. Its market is projected to nearly double too by 2033. Nigeria also shows solid growth, over 5.1% CGR.
Africa's growth, even though it's the smallest market slice right now, it really hints at significant untapped opportunities down the line. You've got that huge, young, rapidly urbanizing population, increasing digital connectivity, evolving trade routes. It's all laying groundwork for future development. There are challenges, of course, but the sheer demographic shifts, the economic changes underway, it makes it a region poised for long-term potential in real estate. Definitely one to keep an eye on.
So, okay, we've gone through a lot of numbers, a lot of regions. What does this all mean for you listening? Well, the consistent global expansion of real estate seems undeniably clear, right?
Absolutely.
We've seen those standout growth regions, APAC, South America, the Middle East, and specific country powerhouses like India, Singapore, Argentina, the UAE, Germany, Canada, South Africa too. These numbers, they paint a picture of a sector that, yeah, it's localized in many ways,
Yeah.
but it's fundamentally interconnected and expanding everywhere.
It is a lot to take in.
It is. But what this flood of data really highlights is this dynamic interplay of global forces shaping, our built environment and the immense value that continues to be generated.
And I think this deep dive, it serves as a really valuable tool, actually, for almost anyone navigating the global economy.
Yep.
Well, whether you're an investor looking for opportunities or a developer planning your next project, maybe a policymaker thinking about urban strategy, or even if you're just curious about global economic trends, understanding these kinds of projections is pretty essential, isn't it? Which raises an important question, maybe. What strategies would each of those people need, not just to react, but to really capitalize on or maybe even influence these big long-term trends?
That's a crucial question. Understanding these projections gives you, well, incredible insight into economic indicators, potential future opportunities
Yeah.
all over the world. It's about being informed, being ready for what might be next, seeing the patterns in all the noise.
Exactly. And maybe one final thought. Beyond the specific numbers we've discussed today from this report, it's also worth thinking about how unforeseen things might play out. Global events we can't predict.
Like what?
Well, maybe new technologies that suddenly speed up construction or totally change how we live, or dramatic demographic shifts that weren't factored into this specific data set. Things like that could influence or maybe even accelerate these long-term real estate trends even further. The dynamism of this market is, it's truly remarkable. It's always evolving.
Absolutely. A great point to end on. Thank you for joining us on this deep dive. Our discussion today was informed by the excellent insights from Cognitive Market Research. We hope this exploration fuels your continued curiosity and helps you unpack complex topics like this one. Welcome to the Deep Dive. Today, we're digging into, well, a sector that literally builds the world around us, the real estate market.
It really does.
We've looked through the sources you sent over, and our mission here is to, unpack what's really going on beneath the surface, what forces are driving it, what's holding it back, and maybe uncover some surprising shifts happening right now.
And it's fascinating because, as you said, it impacts everyone. You look up, you see these huge residential towers changing skylines.
Yeah.
You look around, massive infrastructure projects are pushing boundaries. It's not just bricks and mortar, is it? It's really fundamental to global development, huge capital flows, economic health.
Definitely. Understanding it helps us understand, well, a lot about our world.
And maybe even our own choices in future.
Okay, so with that scale in mind, let's get into the engines. What's actually propelling this sector forward right now? Looking at the sources, what's the big one?
Well, I think the most undeniable force, really, is just the sheer pace of urbanization and population growth alongside it.
More people moving to cities.
Exactly. I mean, the projections are staggering, something like 68% of everyone living in urban areas by 2050. That's not just a few more people.
No.
It creates this, immense direct pressure. Demand just skyrockets for housing, obviously, but also commercial space, those mixed-use developments everyone talks about.
A live, work, play kind of places.
Yeah.
So how does that pressure play out? Is it just, okay, we need more buildings, or is there a kind of ripple effect?
Oh, it's absolutely a ripple effect, a domino effect even. This flood of people into cities basically forces the hand of governments and private developers. They have to invest.
Big money.
Huge money. Massive capital flows into new construction, sure, but also into all the surrounding infrastructure, better transport, utilities, parks, schools.
Stuff that makes the new buildings actually work.
Precisely.
Yeah.
And it's not altruism, it's strategic, because that investment directly boosts property values nearby, which then attracts more businesses, more people. It becomes this self-reinforcing cycle of growth. It feeds itself.
Which leads nicely into that next driver, doesn't it? This whole idea of investment and specifically infrastructure getting better. Real estate's always been seen as, a safe bet long term.
It has that reputation, certainly, and it continues to pull in investors, big institutions, and individuals from all over the world. Why? Well, strong potential for long-term returns, yes, but also the tangible security of it.
You can touch it. It's real.
Exactly. It's land. It's concrete. It feels solid compared to, say, stocks sometimes. And when we talk infrastructure now, it's way beyond just roads.
Right.
We're talking huge initiatives, things like smart cities.
Using tech to manage the city better?
Yeah, IoT, data, optimizing traffic, energy, everything, or, massive metro expansions, high-speed rail, expressways.
Mm,
These aren't just about convenience.
no.
They strategically inflate property values along those corridors. They pull in businesses, residents who absolutely prioritize being connected, and frankly, efficiency.
Makes sense. Better connections, more desirable place to be.
And speaking of desirable, another huge factor, you really can't ignore it, is low interest rates and supportive mortgage policies. The sources really hammered this home.
They did, and rightly so. I mean, think about it. Historically low borrowing costs for a while there just blew the doors open for homeownership, made it seem much more attainable for a lot more people.
Definitely felt that way.
But it's not just the rates in isolation. It's the whole policy environment around them. Governments often jump in, as the sources show, with things like tax breaks, maybe reduced stamp duty, direct benefits, especially for first-time buyers.
Trying to get people onto the property ladder.
Exactly. It's often a deliberate strategy, right?
Yeah.
Stimulate the housing market, inject some cash, make real estate look like a good investment, not just for the big players, but for, everyday people wanting to build some wealth.
Okay, so those are some powerful tailwinds. But it's definitely not all smooth sailing, is it?
Yeah.
What are the big challenges? The restraints holding things back? Yeah, absolutely not smooth sailing. And probably the most talked about headwind, especially in those desirable urban centers, is just affordability or lack thereof.
Prices just keep going up.
Way up. Your sources point this out clearly. Property prices surging, often much faster than wages are growing. We've seen cities with, 10-15% jumps year on year.
Insane numbers.
It pushes homes way beyond the reach of, middle-income families. And it's not just the sticker price. It's the whole initial whack, the deposit, taxes, fees, plus ongoing maintenance. It's just prohibitive.
So it's a huge barrier.
A massive barrier. And that definitely slows things down, particularly in the residential market. It puts a drag on momentum.
And, okay, let's say you can somehow scrape the money together. Getting a project actually built sounds like a nightmare sometimes. Regulatory complexity, slow approvals.
Oh, don't get me started. It's a huge one. The sources consistently flag it. Just acquiring land, then navigating zoning laws that seem to change constantly, getting all the permits.
Sounds exhausting.
It is. It can be really daunting and incredibly time-consuming. And what makes it worse is often inconsistent rules between different areas, just sheer bureaucratic red tape, and let's be honest, in some places, corruption is still a factor.
Wow.
And these aren't just like small delays we're talking about. They can push projects back years, inflate costs significantly, 20-30% easily on big developments.
And that must scare off investors too, right? Especially foreign ones.
Absolutely. It discourages investment, especially foreign investment looking for stability and predictability. It really can stunt growth.
Okay. And the last big challenge, the one that kind of looms over everything, the economy itself.
Yeah.
Fluctuations, interest rate worries. Real estate is super sensitive to that, isn't it?
Incredibly sensitive. It's tightly tethered to those bigger macroeconomic trends. So, during a downturn or when inflation suddenly spikes or banks tighten lending.
People get nervous.
Exactly. Consumer confidence drops, people cut back spending, and demand for property just dips. Plus, just the uncertainty about where interest rates might go next can make buyers really hesitant.
Makes sense. Why jump in now if it might get cheaper or borrowing might get harder?
Precisely. They delay big decisions, wait and see, and that leads to fewer transactions, sometimes gluts of property sitting on the market. It's a really delicate balance.
Okay, so we've got the drivers pushing things forward, the restraints holding things back. But the market isn't static, right?
Yeah.
What are the sort of new, exciting things bubbling up, the trends that are really changing the game?
Definitely. There are some really transformative trends emerging. One of the biggest, I'd say, is the shift towards intelligent and eco-friendly buildings. Sustainability is not just a nice-to-have anymore.
It's a demand, yeah.
It really is. Buyers expect it, tenants demand it. So developers are seriously integrating energy-efficient designs, better insulation, smarter windows, but also smart building management systems.
Using tech again.
Yeah, using AI, IoT sensors to optimize everything: lighting, heating, cooling, air quality, and integrating renewable energy like solar panels.
And does it actually pay off? Beyond looking good.
Oh, yeah. The sources show these green innovations aren't just about, saving the planet. They offer real, tangible, long-term value. Lower operating costs, maybe 20–30% less, and certified green buildings often command higher property valuations.
Interesting. Okay, what else is trending? With work changing so much.
Ah, yes, hybrid work. That's fueling another boom. Shared living and working environments, co-living, co-working spaces, they're really taking off.
More than just renting a desk.
Much more. They're evolving into these sort of micro communities. Think about it. With hybrid work flexibility, they really appeal to students, freelancers, startups, people looking for affordability, sure, but also that built-in community networking.
A different kind of setup than traditional lease.
Totally different. Flexible terms, services bundled in.
Yeah.
Your sources show it's a really fast-growing niche. Some reports mention co-working space doubling in major cities in just the last 5 years. It's meeting this new demand for flexibility and collaboration.
And underpinning a lot of this, I guess, is technology. Prop tech, they call it.
Yeah,
That seems to be moving incredibly fast.
it really is. Property technology, prop tech, is genuinely revolutionizing things, making real estate more accessible, way more efficient, and more transparent.
How so?
Uh-huh.
Beyond just looking at listings online.
Oh, way beyond. We're seeing AI used for really sophisticated predictive analytics on property values,
Yeah.
crunching data on local demographics, crime rates, school quality.
Wow, okay.
Virtual tours are standard now, obviously, but also online legal documentation, even exploring things like blockchain for secure land registries to cut down fraud.
So making the whole process smoother, faster.
Exactly. It empowers buyers and sellers,
No.
potentially cuts out some middlemen, streamlines decision-making. It's pushing the whole sector towards a much more efficient future.
So it's clear, isn't it? The real estate market is just evolving incredibly quickly. You've got these powerful forces like people moving to cities, amazing tech innovations, and just, well, society's needs changing.
Absolutely.
And yeah, there are still big hurdles. Affordability is a huge one. Regulations can be tricky. But the sector seems remarkably resilient, adaptable, always finding new ways to grow.
It really does. Which maybe leads to a final thought for you to consider. Given all these intertwined drivers we talked about, the challenges that persist, and these really quite transformative trends, how might the actual physical spaces we live and work in continue to reshape our daily lives? And maybe, just maybe, what new opportunities could emerge for you to engage with this constantly shifting landscape, perhaps in ways we haven't even thought of yet?